Good morning and welcome to my weekly real estate market update. Hope you're having a great day. This is live, but if you're listening through our newsletter, yes, please enjoy this week's update. And I urge you to check out my week's blog that I've written about this week, talking about migration and interest rates and how that's having an effect on the property market locally here in Australia, locally here on the Sunshine Coast and nationally here in Australia. So it's a little double-edged sword really at the moment. It's going to be interesting to see how it plays out, but migration and population growth is significant, and it looks as though new building approvals, due to a number of factors including the cost to build and labour shortages, are still climbing, and that's really shortening the supply even further. So we expect to see a lot more demand over the next few years, and this shortage or supply crisis that we're experiencing to continue on as well. And that's both for properties available to purchase and in the rental sector as well. What I really want to focus on in here, and I do again encourage you to jump over to Martinuzzi Property Group, to my website there, and check out my blog articles. If you're not yet subscribed to my newsletter, please subscribe there as well. You can jump on there and just put in your email, and you'll get my weekly updates as well as all the property news happening here locally in the hinterland market area on the Sunshine Coast. What's interesting is that the cash rate is now at a 12-year high. So it was about this level 12 years ago. It's got a little bit more to climb to reach the level that was in 2012, which was pretty significantly high. So it's at 4.35%, the cash rate now. Now looking at your average variable loan right now, and most lenders that I use or speak to are saying that it's about 5.94%, something like that for homeowners, people that are looking to purchase property. So 5.94%, but they do use a buffer of 3% to assess your mortgage payment ability. So that takes you up to close to 9%, right? So that's really reducing people that are looking to get into the housing market, really reducing their borrowing capacity. Now, speaking to a broker the other day, and it's not quite accurate, but it's about for every 25% basis points, reduce your borrowing capacity by $50,000. And he had an example of a client there that, back in May 2022, he was looking at a loan of about $850,000. And now they're looking at a loan of about $550,000. So really significantly reduced their borrowing capacity with, now 13 13 rate rises in sort of a short period of time. So that's really putting a pinch on people that are looking to enter the market, particularly, younger people, single people, people that are looking to enter the market for the first time, maybe single income, dual income. It really will be struggling for them to get into the housing market now with the interest rates at the level they're at. Now, the main thing that's really affecting that is property prices. Now, property prices, as we all know, have climbed, and there's not much you can do about it, because if there's a lack of supply and so much demand, that obviously continues to push up the prices, and that's what's exactly happening right now. And whilst the market's still strong, it's a little bit slower. People don't have as much confidence, and there's a lot of buyers, particularly the first home buyers, and even investors to an extent, that just can't enter the market now. So that part of the market's really dropped below, and that's really causing us to feel like the market's really slowed. But it is still strong, because there's a lot of owner-occupiers, people that are looking to make their second purchase or make a move, that are cash up, have built up equity within their houses, and looking to sell and buy. And those people can certainly afford to sell and buy, because they're doing that in the same market. So that part of the market's still there, and that's why it still seems to be remaining quite strong as far as prices remaining firm, and even climbing in some areas like Brisbane and Sydney. Property prices are phenomenal growth this year. So it's interesting to see how that plays out. But looking at another report I just read this morning, the average mortgage right now in Australia is close to $600,000. Now, that's an increase of almost 50% since 2013. So the average mortgage is about $245,000 higher than it was back in 2013. Now, the wages haven't grown to keep up with that level of mortgage. And the average repayments for the mortgage holder is actually risen from about $2,500 to close to $4,200. So that's a significant increase in mortgage repayments. So that's certainly going to have a pinch on people that don't have higher incomes. So people that are in the mid-income bracket or lower income bracket, certainly going to struggle to keep up with those mortgage repayments, and that's going to cause a lot of stress. and the household debt to income ratio has risen significantly. It's at a record high right now. So that's a big sign that there's some imbalance within the property market in Australia, and I think the government needs to intervene, because continually to put up the cash rate to try and dampen inflation is actually affecting really the people that are going to struggle the most with that, whilst the other party, the upper class or higher income earners, they're going to be fine. They're going to stick through it, and they're going to be out there spending their money. But they're not the people that it's going to affect. And that's really where I think, government needs to intervene and do something about this housing crisis, because it is a bit of a crisis. And property prices will probably still go up from here, potentially over the next few years. So just my thoughts on it today for you out there listening and interested in the real estate market. That's my thoughts. And if there's anything we can help you with, if you're looking to buy or sell up here on the Sunshine Coast, give us a call. Hope you have a great day.